Okay, hi there. Hello, welcome. This is Amy Gerrish, and I'm here with the end of year real estate market report and kind of what we think is going to happen going into 2021. So let's dive right into it. And I've got my stats up on the screen, and let's talk about kind of where we're ending off in with closings. So right now, looking at January to November, we're still in December. It's December 9th. And so I have basically the whole year up, except for December. So what we're looking at with closings is that we are ending the year only 4% up in closings, which is mind blowing considering how hard us real estate agents have been working and getting people under contract and closing homes. And like, we feel like it's been like this crazy banner year, but honestly, the market's only up 4%, which is not statistically significant in any, analyst eyes. So what happened? So I'm going to tell you. So basically, going into January, February, we started having these great closing months. January was up 18%, February was up 14%, and with coronavirus hitting in March, we were up 4%. So we were still up and the market was still strong enough to get us into the positive numbers. But as you can see in April, the effects of people backing out of their contracts in March, we were down almost 26% in closings in April, and we were down 33% closings in May. So we did have this effect of people dropped out of the market, starting in March, and we were seeing negative numbers in April and May. So closings pretty much dropped. And then people were just kind of, what's going to happen? What's going to happen? And the market picked right back up. June, we were positive by 3%, July, 12%, August, 3%. And then in September, it was just like gangbangers, 20%, 24%, 28%. So that's where we kind of made up for the losses that we felt in March, April, and May. We're kind of hitting at the end of the year here in September, October, November. And guys, we all know that it kind of slows down a little bit. We're working with more serious buyers in the fall and less looky-loo buyers, but it's usually there's not a whole bunch of them. It's just, it's just crazy. So we had gang busting closings, like usually, in September, October, we're averaging about 7,000, 8,000 closings. This year in 2020, with 9,000, 10,000, 9,000, we're hitting those, really high numbers in closings. So that's what happened there. Let's take a look next at inventory. So inventory is kind of the same story. We're talking, we've been in an inventory shortage here for the past however many years. Demand has always been high enough and inventory has been low for the past several years. And so inventory has always been a problem here in Phoenix. And we've had multiple offers. And then this year it was just like gang busting multiple offers. Like we are used to getting 3 or 4 multiple offers, and now we're seeing 10, 20 multiple offers. And, listing agents are losing their minds trying to organize everything for their clients to look at. Here's 20 offers for you. Which one do you want to pick, right? So going into the year, we were actually down 10% in January with new listings. And going into that, we were down 10%, down 1%. We broke even in March. And then we were down with the coronavirus happening, we were down 16%, 19%. April and May is usually when we start to see more listings hit the market. So what we kind of saw was that people held back, and then the same thing would happen to the closings, is that people started putting their houses on the market in the fall. So we saw this huge rush of inventory come in, actually starting at the end of July. We started seeing inventory come in. We're up 18% in July, 10% or almost 11% in August, 19% in September, 13% in October. And then we started to see it slow down a little bit in November. we were seeing, just to put this in perspective, we were seeing 10,000, 11,000, 11,000 houses every month hit the market. And in November, that slowed down dramatically, and there was only 8,000 or 8,300 houses. So that's kind of what's happening. Inventory is eaten up. We didn't have enough come into the market in November. So that is making December even worse because there's even less inventory going into December. And we're demand is still really, really high. And going into 2021, we are going to continue seeing demand this high. Going into 2021, as long as interest rates remain low. So interest rates are still below 3%. They're hovering around 2.7, 2.8%. And it's still really fantastic for buyers who are looking to buy and refinance, which is keeping demand super, super high. Now, going into 2021, we're going to start to see our market kind of hopefully normalize, and hopefully all of the delayed stuff is getting out of the way. So all of those delayed listings, all of that kind of stuff, and we're going to start to see the market normalize going into 2021. So our normal pattern of people coming out and listing January, February, March, things going under contract, March, April, May, we have a ton of closings. May, June, and July, and then we kind of slow down again. So we're going to see it all ramp back up going into 2021. Listings are going to come back on the market. More buyers are going to come out to play, and we're going to just continue working really, really hard going into 2021. The only thing that we have to watch out for that could change that is if the economy shifts or changes. So we just really need to keep an eye on the continued economic growth and continued job growth and unemployment numbers, because if that shifts back down again and the economy slows down, that could slow down real estate a little bit. So let's talk about, let's talk about where we're at for December. So December, going into December, again, it's only December 9th. So we're looking at, we had closings already. We're up 16% in closings. So last December of 2019, we had about 2162 closings between December 1st and December 9th. And this month, we've already seen 2,500 closings. Excuse me. So 16%, we're up in closings. December is going to be another high closing month. Let's look at pricing a little bit and where we're at with the average closing price, not the average listing price, is what people are actually paying for houses. So in the first 3 months of 2020, the average closing price was about $374,000 for a 2,000 square foot home. We're looking at now, at the end of the year, the last 3 full months, I just analyzed November, October, and September, we're looking at the average closing price of about $420,000 going for an average 2,000 square foot house. So that is up 12%. So home values are up 12% from the first quarter of 2020 to the last quarter of 2020. And so we are just, this low inventory and this high demand is just certainly squeezing those prices higher and higher. So it'll be interesting to see if 2021 will, if there is an affordability factor that's going to come into play, especially if real estate, interest rates rise even just a little bit, we might start to see things slow down, but that's an if. So that's another thing we need to keep an eye on, as well as the economic indicators, unemployment, job growth and all of that kind of stuff. So excuse me, that is all I have for you for the end of the year kind of summary update and what's going on with our market. We didn't have a whole lot of growth over last year. It was just more of we saw a slowdown and then it delayed at the end of the year. The growth that we did see was definitely in demand and pricing. So we did see a lot of growth in pricing, but overall number of units that we sold wasn't a significant amount that went up. And I know you guys are like, what? But you feel like you sold 1 million houses this year. I know you certainly showed 1 million houses this year because of all of the multiple offers, but that is where we are at. So if you have any questions, if you're watching this on YouTube and you want to watch my market updates, subscribe to my channel, like this video. If you're watching this on Facebook, if you have any questions, leave some comments and we'll be sure to get back to you. So thank you so much for watching my end of the year summary. Have a great rest of the day.